Hello guys, I just want a quick video here to explain something about the average daily range indicator that we now have in VIP. And I'm looking here at the USD against the Swiss on our standard 1 minute chart. Now what it's telling me here is that over the last 14 days the average daily range of this pair has been 128 pips a day. That's from the high of the day to the low of the day. And today we've seen 112 pips in the daily range. Now when you come down to here, then you see that about an hour ago we had a couple of OBOS buy signals, and then we had a block starting to form. We were in a situation there where we'd already traded about 90% of the day's trading range. Now when you're at 90% of the day's trading range, the likelihood of the market coming much further down is pretty slim, because you're already 90% worked out, if that makes sense. So as soon as you actually saw these two OBOS signals in your alert box, and you saw the formation of that block there, you should have made notice also of the fact that we were in that 90% sold area of this market, and it was very likely that if you were to get a supply and demand buy, it would have been a very high probability trade. And as you can see, that trade is currently standing at 15 pips, and that's a perfect example of how I would be using the ADR to try and get into the market for a very high probability trade when I can see that the market has more or less run out of steam, either at the top or the bottom of its trading range. If I can just see if I can pick up another one here. If we just have a look at this particular pair and we just measure there, we've just got our 20 pips. Now if you have a look at this one, this is another perfect example here that we've already traded over 90% of the average daily range from the high to the low at this point. So as soon as this block started to build here and that signal came in, you could have been very confident that that buy, irrespective of that block, would have been a very high probability trade of going straight to profit without any drawdown. And you can see, had you placed your trade there to buy, you'd have got 15, 16, 17 pips as opposed to the standard 5 or 7. So that's just a very quick video showing you how important it is to take into consideration the average daily range. And when you see entries coming in from the funded trader system that are based at these extremes of the ranges, you can expect that trade that you're just going to be entering to a very highly probable chance of going straight to profit without going into any drawdown. So that's how the average daily range works, guys, and that's how I would like you to be studying it and making note, because it does tell you more or less perfect entry times, because a market is either oversold or overbought and it's ready to now come back into its trading range.